You've got DLF which is bouncing back, State Bank of India is looking strong, but that's about it. You know, we've seen a fair degree of compression, and from there a bounce cannot be ruled out. But that is something which really could be called as temporary nature. Look, the bears know that right now they have ammunition. Fear of a global trade war, election uncertainty, DIs are not getting all that flows. So if they go short, you know, nobody is going to come out and buy this market very aggressively. And then this marked visible slowdown which suddenly has come into earnings, which in a sense has got puzzled everyone, that why Indians suddenly are not consuming consumer goods and where their conditioning sales have gone and why auto sales have got punctured so badly. So I'll take the conversation forward with Shridhar Sivaram. He's just come back from a long road show and he's traveled the length and the breadth of India from south to north and north to east. How many kilometers you've done, Shridhar?
Almost 1,000 kilometers over 4 weeks.
1,000 kilometers over 4 weeks. And what is that one word you've come back with?
Oh,
slowdown?
No, the consumption slowdown is there, but there were different pockets had different sort of anecdotes. At least in Tamil Nadu, it seemed like at least the TVS dealer mentioned that the demand.
I'm so sorry. I think इन्होंने आपकी पुरानी photo डाल दी है. You don't look like this.
No issues.
You don't look like this, right?
Of course he does. Very fit.
Yeah, so I was saying that TVS dealer mentioned that the demand in April has started to improve. In fact, he was doing almost 20-25% growth for April. But it's very difficult to extrapolate that for the entire year or for a quarter. It could be because of the election effect. In certain other pockets like in UP, the slowdown was still there and there was inventory issues. So the inventories were getting cleared. So it wasn't like a clear view across the country. It was different pockets had different sort of.
So is the slowdown what we're talking about right now, is this cyclical or is this structural? Is this largely because of delay in decision making because of funding, because of election, or this is something which could be a prolonged 2-3 year slowdown? Because very frankly, in last 5-7 years, we've not seen a marked slowdown in consumption.
Yeah.
Is this that slowdown cycle which we were fearing? Is the beginning of that?
So at least the sense I got that this is more cyclical than structural, because the funding issue is for real. At least when we've spoken to people on the ground, it was very clear that they were getting this funding for two-wheelers or passenger vehicle very easily. Now the number of players available is much lesser, and the credit criteria they are now asking for is much tighter. So that is also causing. Plus GST related issues, especially not related to auto but in other consumption sectors, it still comes up that some of the smaller traders are still not very happy with the entire way GST is shaping up, the amount of filings that they have to do. So I think a lot of it is I would say cyclical, because one, we've had a change of taxation structure, and that takes about 2-3 years to stabilize. So I would say that maybe in another 6 months time, whichever government comes, they may actually end up benefiting from some of the reforms which have happened in the last 2-3 years, which are having their teething issues right now. And they may stabilize and will benefit, maybe in 6 to 12 months' time.
I noticed you said whichever government may come. So he's really unsure about. There's lots to read in between the lines.
I have no expertise as far as elections are
concerned. You must have
concerned.
slipped in a question.
But at least you're not coming with a sure shot view after your entire round trip.
No, I mean it's very difficult to call, and just doing 4 states, 1,000 kilometers is hardly.
Those are 4 big states.
Huh?
Those are 4 big states which account for 50% of Lok Sabha seats. Tamil Nadu, Uttar Pradesh. You also went to Bihar, right?
So I think I can say that it looks that the market consensus probably may be right, which is that the current regime
would continue.
Will continue with a lower majority. But I think the big question mark is what happens to UP, because there I think depending on whom you spoke, you got a range between 20 and 60 for BJP. So it really wasn't very clear.
Okay, now before Avan throws a hard question at you, I just want to ask you an easy question, and some data point will just come up on your screen. That what is the market positioning 1 month ahead of the election? It's important for us to consider that, right? I mean, the reason why markets came down in 2004 because everybody was betting on return of NDA, and Atal Bihari Vajpayee did not come back, markets got disappointed. In 2000 now, nobody was expecting a full majority for UPA 2, and UPA 2 came back and markets went higher. So if you really look at the market positioning, there is no euphoria this time, unlike 2004 or 2014.
So if you look at the market and you look at the broader market, that gives you a better sentiment. So you leave out the 10 stocks and you look at the broader market there. The broader market is clearly telling you that the positioning is very light. Nobody wants to go on 23rd with a heavy position. So even if you get a consensus view, my gut feel is that market could rally a bit, but keep in mind that there is also a slowdown. So eventually earnings have to come. So if the earnings do not follow through, that sort of a rally could be sold into. But all I'm trying to say is that it isn't like a euphoric position. You go and meet people, fund manager, friends. Nobody's sure of what could be the outcome, and we've seen in the past that election results could have volatile short-term movements, and nobody wants to play that right now.
Yeah, you know, besides elections as well as earnings, now you've got this another dynamic between US and China as well.
Right.
And just going by the last flash, it seems that the tariffs are going to get slapped unless China manages to really, you know, get a rabbit out of the hat and call it truce in the last minute, and the deadline gets extended or whatever have you. What happens in this kind of a scenario when the globe as well is getting under pressure? Tracking the US 10-year paper, you feel like is going to hit recession sometime.
Right. So first, my view on the tariff itself. I actually support US on the tariff. So if I look at all the speeches of Trump, so one of the phrases that he uses is reciprocal, which is that if China is able to export so much into the US, then there should be a reciprocal arrangement for the US companies to also do that.
But they're inefficient. Their wages are high.
No, they don't make that much.
That is not true.
Also.
You can allow Google and Facebook to start their operation in China. None of the financial services companies are allowed to stand alone, take a position or to operate in China. So when it says reciprocal, it doesn't mean that exactly in manufacturing itself. It could be in services. So what has happened over the years is that US has a $500 billion of trade deficit with China, which is unsustainable. I mean, I'm surprised that the previous regimes actually allowed it to go to this level. So, I mean, as I've read some articles saying it's only one madman can, handle another. Now, I don't know what people are referring to here.
There are many of them out there.
I know. But I'm just saying that you need some drastic steps to happen for this sort of equation to settle down. So to that extent, I support what US is doing. Now, what happens to global trade in the interim? Yes, there will be turmoil, but we've seen this in the last 18 months that this trade talks, trade war has gone on. Markets sort of takes a knock for about a month or so, and then they rally back. That comes back from the fact that the US is in a cycle where the Fed has completely turned from wanting to tighten. Now there are suggestions that we could even see a cut. So if that is the global environment, then that's a great thing for emerging markets. And I'll just add one more point here, that UBS recently came out with a report, and they've done a CEO survey of about 5 or 7 countries, including China and many of the ASEAN countries, on this entire manufacturing and what happens. And India has come out very highly on that as far as shift of manufacturing, because China is becoming more and more expensive to manufacture. So it is an opportunity for India, but not in the short term. This is a medium and a long term opportunity, provided India plays its cards well. So I think the two ways of looking at it. So short term there will be volatility, and one has to brace for some volatile.
That's going to extra bear on us.
Yeah, but you're saying it's a justified move as of now, at least.
That's my personal view.
Sure. Let's get right back to India then. And this ongoing economic slowdown, that's also appearing to affect the all-important construction sector, where activity there has slowed down. How dangerous would that be for the overall economic growth if we were to see a slowdown, which is what a lot of these players are alluding to?
Yeah. So, during my trip in Tamil Nadu, I found a really different view. I mean, their cement demand grew more than 20% last year. And, cement dealer after dealer kept telling me that the demand is coming because of Pradhan Mantri Awas Yojana. And that people are building houses there because there is a huge subsidy which the government is giving. And the demand is not there in the towns, in the big cities and towns, but demand is there in the rural areas, and they're seeing very strong demand there. And when speaking to some bureaucrats, the sense I got is that Tamil Nadu as a state has adopted central schemes very well, irrespective of who's in the center. If the scheme is very good for the state or for the people at large, they have adopted it very well, and that's the sort of response I got. So I'm just thinking that if other states are able to adopt, there's possible that cement demand could come up, you know, maybe in the next regime, whoever comes and they take this forward, we could see demand come back as far as cement is concerned. But I agree with you that broadly there is some slowdown as far as the larger real estate is concerned, and that remains a concern not only on the slowdown, also on the way they are being funded. So I guess that is a concern for the market.
A very simple dipstick analysis tells us that NBFCs are not lending. Are we looking at a big pork in this entire consumer boom? You know, the Bajaj Finance of the world financed just about everything you wanted to buy. From even buying medical insurance to buy a mobile phone, everything was financed. There is going to be an asset liability mismatch. What happens if this entire NBFC wheel, which already has turned?
So if you ask me, my biggest concern for the market is actually the NBFC and the HFCs, and I've been speaking about this for almost 2 years. Actually, my concern is not so much on the NBFC, especially the retail. My concern is more on the HFC, because of the way they are structured. You know, almost only mortgage is only 65% or 60-65% of their book. Rest is all builder and LAP. And we don't know what is happening there, because the regulations, because they come under NHB and it's a very weak regulator. We really don't know if the numbers that are being thrown out by some of these companies are true and fair. Very similar to how the banks were, say, 3 years back. None of us believed the NPA numbers. So today what we see from the banks, most of us can say hand on heart that is 90% it's true. But for an HFC, especially a corporate facing or somebody who has large exposure to builders, we hardly see any NPA from builders, and we know that the builders are in stress. So in my view, there needs to be an AQR. People like Arvind Subramaniam have also raised this point that there should be an AQR for HFCs and NBFCs. I think it's only then that the confidence for the sector will come back and they will see funding. Incrementally, when I speak to them, they are not getting funding. Maybe the top 3-4 of them are getting funding. The rest are not getting any bank line, any funding. Mutual funds have shut shop for maybe barring the top 3. They've shut shop for many of the other NBFCs. So I think there is a trouble here. Whenever the new government comes, I'm sure they, along with Reserve Bank, have to figure out a way to, resolve this mess. And I think the start would be better transparency.
What are you buying which is looking distressed? Are you buying autos? Are you buying consumers? Would you look at buying metal because of the trade warfare?
So autos, yes, because as I said, we think this is a cyclical slowdown, and you're getting good companies with brand, with cash flows, with no debt, and at valuations which are fairly compelling right now.
Define what is attractive, because iShare is 25 times, Maruti is 30 times, two-wheelers are teens.
So you can look at other two-wheelers also. I don't want to name companies, but there are enough two-wheelers available which are trading.
5 company hai total.
So that is for you to guess and the investors to guess, right? So so there is opportunity available there. So I do think that autos in general and auto ancillary. So if you flip that into auto ancillary also, you'll find many auto ancillaries have corrected significantly. So if the auto were to come back, auto ancillaries will also come back. So I think that's a space which looks quite interesting.
He spoke of metals and consumption. What about those two?
So metals, those are really stock specific trade, and really can't say that all of them will move together. We do have some exposure in metals based on the past, and we continue to hold many of them. On consumption, as I mentioned, that we are better off with discretionary than with staples. So we prefer the discretionary consumptions over staples, because even though staples, the stocks have corrected but not significantly, their earnings and their volume growths are significantly corrected. So if you see the last 5-6 results that we have seen, I mean, volume growths have come off from double digits to single digit, in some cases low single digit. So I think that remains a concern, and the risk reward isn't looking favorable right now there.
I just want to talk about telecom. I mean, not because it's fancied, but because one end of the curve is so beaten down. We all know the kind of issues that they're having with funding, right, even though they're trying to do their bit. And on the other hand, you've got the leader again, which is with an extremely bloated debt figure on its balance sheet. Right. If Morgan Stanley's report is anything to go by, that is a large part of their concern, that the core business is shrinking and you've got such a big debt on your balance sheet. How do you approach this entire scenario now?
So normally my simple view is, when you have a pricing war between various players, you're better off being a consumer than a minority shareholder. So I'm enjoying all the data that I'm getting right now.
Even with the
leader? Whether it is the leader or the follower. I think I'm just enjoying all the data that I'm getting. I can watch anywhere, everywhere.
Not getting call drops though?
Well, that is the concern, right? That when you have so much, your quality does go down. But I mean, jokes apart, that is the broad view, that it's very tough to take
stay
a call.
Away.
Yeah, I would say stay away. I mean,
but when you think about it, there are sectors which have gone through serious pain. Hotels, telecom, real estate. The leaders will survive.
Of course.
There were 12 telecom players, there are 3. You can only buy 2. One has got a bad balance sheet. One is still a formidable market leader. Does it make sense to take a slightly cyclical view and a realistic view that a year from now, 2 years from now, these sectors which currently are bombed out sector, the leaders will survive and they will have disproportionate market share?
Yeah, so where the risk reward is good, it is worth. So I'm not saying that we are completely away from telecom. So that is an interesting sector where we know that maybe in a 6 to 12 months time things will change. This pricing war cannot continue for infinite time. So the leader, is possible that he would be able to maintain his leadership position, or even if not the leadership position, profitability may come back. So those are risks as a fund manager you have to take. I think some of them from a value standpoint are reaching there.
Sunil Mittal made a very striking point, at least in my book at Davos, and he said that, look, I don't want to be the biggest telecom player in terms of market share. However, my ambition is to be the most profitable telecom player. Yeah. And he actually quoted Kotak Mahindra Bank. He said they are not the biggest, but they are one of the most profitable and the most remembered bank in terms of service. Whether he can do in telecom is not, I don't know. But the fact that this entire ego which people had, that I am the biggest, once you're ready to accept that, look, I don't want to be the biggest in terms of size, but I want to take care of my interest in the company and shareholders' interest in the company, you start thinking differently.
That's actually true for all sectors. Yeah. Aviation, that's exactly what's happened, I guess.
So many promoters have changed over the last 10 years, because you go back 10 years, most promoters wanted to diversify, get into a different country, do some other business. After what we are seeing, the mayhem that we are seeing over the last 2 years, I think better sense is prevailing, that you're better off with your core competence and do that business. Even if it is small, it's fine. There's no point going into other businesses. But this has come at the cost of a lot of pain to minority shareholders. So I would say that it's good some of this sense is prevailing now, because that's how even minority shareholders will make money in the long run.
So Sridhar, last question. In the next 2 to 3 months, what happens? Do you think all this euphoria around election would have settled down, the trade war would be in the price and the markets would be back to attempting a fresh high, or not in such a hurry?
So honestly, very tough to call the short term, because we've seen in the past that event risks have such volatile movements in the market that even if I want, I'll not be able to make a constructive assessment of that. But all I can say is that in the medium term, India's poised and looks interesting. I'm just saying because the tax to GDP could possibly go up because the way GST is structured, and we could see more collections as time goes by. I did meet the GST commissioner in Tamil Nadu, and he was very happy with the GST collections. And in fact, he suggested that I don't even want to do any raids, any of these things, because collections are quite good. Why let it be? If some people are evading, so be it. But the collections are good. Let it settle down, then we'll see. So I'm just giving.
So in 6 months, it'll all settle down.
Exactly. So once it settles down, we will see more people in the tax net, and GST settles down. People will be happy that they're getting offsets, they're getting more funding because they're coming into the GST. So all I'm trying to say is that it looks poised the markets looks poised for a rally, but lot of depends on how the next government comes and takes some of these reforms forward.
Well,
okay, we've got multiple cues from our director saying we need to wrap up the discussion, but it's been so interesting.
Thank you. Thanks
Thank you for dropping by. Thank you for giving us your take on what's going on.